does this finally mean the PBOC is moving away from that targeted, more moderate approach? What exactly are they saying they will do?
Well, it seems like they're trying to give themselves more room to maneuver, even if they're not ready at this stage to go down the route of quantitative easing. What we're hearing is this is the quarterly monetary policy implementation report. It was released on Sunday. The central bank here saying it's going to pay more attention now to economic growth and jobs as the impact from the coronavirus shutdowns around the world weigh on the global economy. So it reiterated that prudent monetary policy will be more flexible and appropriate, and that liquidity will be kept at a reasonably ample level. And indeed, they have been injecting liquidity into the financial system here. Importantly, though, the report dropped a previous pledge to avoid excess liquidity, quote, flooding the economy, again, suggesting that the central bank is trying to give itself a little bit more space to enact policies to support the economy here as the pressures continue. And China's economy, of course, does remain under pressure. It contracted 6.8% in the first quarter. Domestic activity has resumed now to near pre-pandemic levels, but of course that external demand picture remains anemic.
And Tom, given the drop in the certain parts of the language, just how much does that show the concern from the PBOC about the health of the global economy?
Well, they stated pretty clearly in this report that they think the global economy has slipped into what they called a recession track, at least in the short term. And they warned, in fact, that the impact of the virus may be being underestimated. They think the damage could be more than expected. They also pointed out that the international outlook, again, for controlling that outbreak remains unclear, and the policy room for other central banks is limited. It doesn't seem, though, at this stage, again, that the PBOC is going to be reaching for unconventional tools at this point. Whilst still giving itself room to maneuver, it doesn't seem like it's going to be reaching again for QE. It said it would keep China as one of the few major economies that's implementing what they described as normal monetary policy. They talked about issues like re-lending and rediscounting policies they're going to put into full use. They want to expand credit support to virus-hit sectors like agriculture and trade. And they said, in terms of China's economic fundamentals, that they remained relatively solid. There's no reason, the PBOC said, for long-term inflation or deflation. And they said, again, and reiterated this pledge to keep financial risks under control. So that's clearly in focus as well. So economists, of course, expect further cuts to reserve ratios and a lowering of the loan prime rates further into 2020. But it seems they are trying to open up the playbook a little bit more as the economy here remains under pressure.